Hello, guys, and welcome to our 114th edition of the Trading Opportunities webinar. Hello, Martin. Always the first one to come in. So, guys, and of course, those who are live alongside Martin, let me know if the audio is clear, video feed is working. And while you guys do that, I'll just get on with the introduction because at least at mine it looks to be working. Just give me a double confirmation. Okay, it looks like it is working. Yes. So, Luis, good morning to you. And yes, Martin, I am well. Everything is okay. Thank you for the confirmation, Luis and Martin. In that case, let's just quickly get ahead with a very quick introduction, guys. This is the 114th edition of the Trading Opportunities webinar. My name is Nirav. I'm the admin and owner of the website as well as a YouTube channel, 50 Eyes Market Analysis, where we have been doing these webinars for quite some time now. And what we basically do in these webinars is we come along and discuss some of the major instruments traded all over the world, including crude oil, gold, S&P 500, Nifty, and Bitcoin alongside Euro USD. In the last 113 webinars, we have been able to capture 273 trading opportunities, including the 5 discussed in the last webinar. So there were 5 setups discussed, all of them actually played out, and I was trading literally all of them. So we'll discuss them, and some of the positions are still open, by the way. We'll discuss all that as we go along the webinar, right? So with that being said, we do these webinars every Friday at 7:30 p.m. IST or 2 p.m. GMT. So whichever time zone you are in, just convert it accordingly. Apart from this, I'm also the author of the book Think with the Markets, available on Amazon Kindle. And more details you can find over here on my website, this link, right? And yes, I'm also the author of this course on Elliott Wave, which has 1600 plus students. So if you are a beginner to this methodology which we use in this webinars, then you can just check this out. And lastly, before we proceed, here is the track record of my work over the years, since I've been doing it for quite some time now, 8+ years something. I have kept a track record of all the webinars and videos which I have published over these years, and the accuracy has stayed over 80% plus, which is exceptionally high for this industry. Once I can let it load up. This is a spreadsheet where I've kept a track record, all the links, all the analysis. It has been put up here, and the result is also right on the side. So as you can see, in 2016, 83.34, 2017, 87.5, 84.6. 84.88, 88.52, and so on and so forth. And since 2022, we started doing these webinars called Trading Opportunities webinar, for which you just learned how we are doing. So you can check all of these at any point in time. Here's the date, instrument name, the analysis, the link for the video, and the result. So as I said, it is much higher than industry standards, and we always like to show it off because we have been doing it for quite some time. Now, that being said, lastly, if you are interested in being a part and getting these updates as they happen, we do have a private Slack group, and details can be requested here on the contact us page. Right. So that's about that. Let's now begin. This will be our sequence: Euro USD followed by crude oil, followed by gold, S&P Nifty, and in the end, we will discuss Bitcoin chart. So with that being said, let's now head over first to our chart of. Actually, let's just check what was being said about Euro USD in our last webinar, and then we will check the chart or the actual chart of EURUSD. So here's the recording from the last webinar, and we were discussing on EURUSD. The main idea we discussed was that we were expecting A down and corrective wave 2 continuation, as you can see with this circled yellow 2. This is what we expect, continuation of the movement in a flat. Price was at 1.07591 and we were expecting the market will go up. So far it has gone up. Now let's look at the actual chart. Here's the actual chart. So the price was 1.075 something. It is currently at 77. I'm not saying it has done the whole count. It is a higher time frame count for it, so it may take some time to proceed and complete itself. But for now, it is still in the progressive stages. I am still holding longs on euro, by the way, and we'll see how it goes. This is still holding up. The count is literally the same from the last webinar. And just to conclude, for those of you who did not attend the last webinar, we are expecting a structure like this. And possibly after that, we will have a correction and then another leg up. So for now, we are interested in this leg. And for that, we can check the equality with this leg. This is called an A up, this is called a B down, and this will be called a C up. So A and C equality we can check. We are not much interested in targets because even at the bare minimum, it should cross 1.11372, which is this high. So overall, looks to be progressing as expected, and let's see how it goes. It's a swing long right now, and I'm holding it on euro. So nothing much to add. Our last analysis is working as per analysis, and let's see how it goes. And I seem to have missed some comments here. Sushil, hello. And Sushil has once again amazing analysis on gold. Yes, gold analysis has played out exceptionally well. I'm currently still holding longs there. Yes, we will discuss that. And when we go to gold, Martin is saying yes, we are observing a C. Yes, so nothing to add here. I guess everybody who is here is already clear. So in that case, let's now head over to our next chart, which will be the chart of crude oil. Again, let's have a very quick look at the last webinar's recording on CL before we proceed with the current chart. So here is the recording. Let's see where CL was discussed, somewhere around here. Let's see what was being said. So yes, in CL, as you can see in the last recording or the last webinar, which was conducted on 3rd May, is the idea is that down, correction, up, and then down. So we were expecting more downside on this counter. Let's see the price. The price is around 78.742. And I was actually trading this thing, and let's see. So this was 3rd of May. So the discussion was done somewhere. Let's see the time. So somewhere here we were discussing it. I'm not precisely sure. 78.75 actually, yeah. We can be sure. Somewhere lower part, somewhere here. Somewhere within this range we were discussing it last time, and the idea was that the market will go down, correction, and then another leg down. So this is the another leg down. We were able to trade it in live market, as well as I'm holding longs for this leg. Right. So it did play out as per our analysis. Now let's see what's really happening right now. What's the logic of this long, and how far I'm interested in holding it. So first of all, currently my stop loss is somewhere within this range, the lower part. And the market has already given us up, and we are expecting a correction and then another leg up. So we are currently in the corrective structure, stop loss at the lower end of the structure, and if it breaks, then I'll exit at once and look to re-enter. Sometimes what happens is market just extends to the downside just to trigger the stop loss. So in this case, I may not be interested in holding it because Some other possibilities also become activated once it takes out this low. The idea will be that if it goes up again, then we can re-enter here or here, something like that. So far, the structure is A up, B down, C up, what we call a zigzag, and we are within the wave B of the zigzag. So once this B is complete, we expect this new leg up. So again, very similar idea as per our last charts discussion. So, but it's on a lower time frame, 15 minutes. So we expect it to show us results much faster, right? So wait and watch on crude oil. I'm holding the longs. I just told you guys all the logic and everything. And as far as targets are concerned, we generally like to go and check 1:1, although it may not always achieve it. And in this case, there is one more thing. We don't even know where's the B's end, where wave B is ending. So we can't figure out the exact target. But if we take, let's say, half of this, then we are expecting 80.8 or higher levels. So that's just an expectation that this level is expected to be touched if this count plays out. So that's about it for our discussion on CL. Quick discussion, zigzag kind of correction expected, and also we just checked our last discussion was also working, or what do you call what? If you guys have any questions on CL so far, you just let me know in the comments, and we'll take it from there. By the way, here is the trade on CL. I can show that. Let's see. So here first I added scalp shorts on 8th, book profit on scalp shorts. After that, I did shorts again for smaller position than the last one. We were expecting a diagonal, and after that, as you can see, we have added longs, right? So this diagonal which you are seeing here was predicted in live market, this whole structure, and we were able to take shorts for this leg as well as longs, right? So this was all posted in Slack, of course, as I mentioned and showed just now. So that's about it. Let's now head over. I don't see any doubts or questions. So now let's head over to our next chart, which will be the chart of gold. Actually, I think we are moving faster than expected, which is actually good. So with gold again, this analysis is pure gold, and no kidding there. We were able to literally figure out the reversal point on this market, which we did discuss in the last webinar. And of course, I was long, as you already know, and I'm still holding those long positions. So just for the sake of record, let me just show you what was the analysis on gold. Discussion was done somewhere here. Yes. So let me just pause the screen here, and this is the last discussion on gold. So what we okay, I have to remove this one second. Yes, so this was the discussion on gold in the last webinar. Let me zoom in to this video. Again, what I'm showing is the live broadcast recording from my YouTube channel itself. So we were expecting a WXYXZ correction, and count is a little bit different than what is shown here. But anyways, the main idea was that if this Z is complete here, then we expect this market to go up, as you can see me pointing up with the arrows. And for there were two sides. First of all, I was already long, and for conservative traders who were not long, the idea was to go long above 2340, which I pointed out was a bit riskier because the entry was far away and the stop loss will be huge. Anyways, the idea was that this Z, as per my primary count, was complete, and that's why I was already long on this counter. And at that point in time, the price was 2291. Now let's look at the actual chart of gold. So 2291. So the market was somewhere here, right? And since then we have held on to our long positions, which seems to have worked out pretty fine. Let me just focus on the current price. We are not interested in too much in the past. So this was the entry or the point of discussion of the last analysis. right? Since then, we have one up, two down, and three up. Looks to be heading inside of wave four. My stop loss is currently around 2350 actually, is my stop loss, which is far above my entry. And even if the stop loss hits, I will be getting out in decent profits or good profits, not even decent, quite good profits. Right. So the count is quite simple. The count is that we are expecting impulse in the upward direction. An impulse is a five-wave structure with the wave one up, two down, and three up, four down, and five up. So within this progression, we have already completed the one, we have already completed the two, and looks like the third is also complete. So that means we expect some sideways movement or at least some corrective downward movement as well on this counter before this market goes up, right? So there are two things we can do here. I can book my profits here and re-enter once this correction is complete, or I can just keep holding with the stop loss where I think the force target is marked. So the four can end somewhere around 2353. That's the expectation based on Fib retracement levels, right? And that's why my stop loss is a little bit lower, although I would say I can adjust a little bit further down as well. It's too close to the expected retracement. Probably I'll just adjust 4 or 5 points more. But so far, around 2353, we expect that the correction of wave 4, which is currently in play, is expected to complete. So once that is complete, we expect the market will either continue sideways within this box range and then go up, or it can just go straight up as well. Both possibilities exist. And even if we are wrong and the market goes past through to 350 and goes to much lower level, still don't care because our entries are far lower and our stop loss will protect us from any losses. So basically, it's a free trade for me at this point. That is, no matter where the market goes, I'll make something out of it. Right. So this is what we discussed in live chat. Oh, sorry, live webinar last time. And as one of our viewers, Sushil, who is also in the Slack group, has already pointed out, we were able to predict this live, the reversal, and pinpointing the reversal basically. Hopefully, Martin and others, Louis and others who are observing, were also there and able to check this in live market. And if you were there, let our viewers know by commenting in the live chat that you were with me live and you were able to check this out, because I don't know how many of you guys actually check our webinar to webinar proof, that is by checking our last recording of what we are saying, right? So this comments in live chat act as a testimonial kind of. And yes, here is Martin's comment. Almost missed it, but I checked it. Yes. Okay, so that's about it for our quick discussion on gold. I'll probably adjust the stop loss right after this webinar. In the meantime, what we'll do is we'll just push an alert here. Okay, so in that case, let's now head over to our next chart, which will be the chart of S&P's 500, and after that we'll go over Nifty and then BTC. And by the way, S&P again is working as per our discussions from last webinar. Let's just quickly head over and check what was being said on S&P in the last webinar, so that we can then look at the actual chart right now. So here is the chart, or the recording, sorry, of S&P's 500 discussion. Somewhere here we were discussing it, and I was long on S&P. I'm not sure if at that point in time also I was holding long, but I do have longs right now. We will have to check that specifically. But anyways, I think I was long back then as well, during the webinar as well. So here was the analysis. We were expecting wave one up, two down, and then third up. And the conservative setup was to enter above 5170 for those who want complete confirmation or stronger setup, because at this point this setup had some chances of more sideways continuation. So 5170 plus was the second entry, but nevertheless I was already long, and this was the count: one up, two down, three up. And now let's look at the actual chart and see how that performed. So this was the analysis from the last webinar. As you can see, one up, two down, and since the discussion was done on 3rd of May, somewhere here, the price around discussion was 5110. 5110. So that means we were here, right? So this was the price, and as you can see, this did play out as per analysis. Again, I have a trailing stop loss on this one on S&P. The idea is kind of the same as per our last discussion. We are expecting an impulse, and an impulse will have 5 legs in it. Out of these 5 legs, we are currently almost complete for the third, and we are expecting a correction for the fourth. Again, same thing, we can either book the profits on the fourth, let the fourth play out, and then re-enter once it starts forming the fifth, or we can hold the position with a stop loss and let it do whatever it's doing, and then move up for the fifth, right? So what we have over here is a beautiful play out of this impulse. I think the third is, I'm assuming currently that the third is still under continuation. So that means this third is not complete here. We are assuming that one more leg up is remaining for this third. After that, there will be this fourth and then the fifth. That is the current count. Might change basis of how the market behaves from here on. But yes, with that being said, what we expect is at least two more legs in the upward direction if this count is correct. And even if we are not completely correct, then at least one more leg in the upward direction. So yes, let me know guys if you were here and watching this analysis as well is in our last webinar, because we are currently from our last discussion up by 110 points roughly, and it has given a high of around 120, right? I believe most of you guys were there, Martin, Louis, Sushil. But anyways, you letting us know and in the live chat and giving our new viewers a taste of what we do every week is even better. Right. With that being said, I have not much to add here, other than the fact I think my stop loss is around 5180 something. Anything between 5180 and 5170. I think 5170, the downside range, would be better. So yes, I'm still holding the longs. Probably will adjust the stop loss to around 5170, or maybe I'll just take the profits out and re-enter. But for now, I'm holding the longs, and that's about that. Nothing much to add here. Yeah, guys, if you have anything to ask on this, you can just let me know. Otherwise, we move over to our next chart of Nifty 50. And yeah, before we move further, again, as always, very quick request here that kindly do share the content once this webinar is complete to your friends, colleagues, and try sharing it with at least 5 of your contacts who are into the business of speculation, basically. So because our current view count should increase, generate more interest, and this hard work which takes hours to come up with and share with you guys is more useful to more people, right? So I believe you guys have Twitter, Facebook, and Discord, or whatever you guys are using for sharing or talking to your trading friends or whatever. So kindly do your part and share the content. Takes a lot of time to do all this. Right. Now that being said, let's now head over to our last two charts, which will be Nifty 50 and then will be followed by Bitcoin. Right. So here is the chart for Nifty, and again let's just very quickly look at what was being said about Nifty in our last webinar, which was conducted on 3rd. So we were expecting that Nifty can give a correction. Here is the recording from our last webinar. Let me zoom in, and we were expecting that the correction can continue. Let me just play the whole thing. To this white support zone, we have even marked the levels. Where are the levels? I'm pretty sure. Yeah, there it is. So the expected downside levels were 22280 and 22170. So 22170 was the downside expectation of this wide support zone of this correction. We were expecting an A down, B up, and C down kind of correction. Now it so happened the market did go down, but it has exceeded the downside target. Let's see that on live chart. So 22170 will be somewhere here. There it is. As you can see, the market did go to our downside target and then took a support over here and then went past through it. So it does happen time to time that the targets are exceeded, but we were not expecting an exceeding, or we generally do not expect an exceed of the target in a corrective structure. So in itself is not good for the bull players here. But looking at the count, we expect the correction is still holding up as an ABC. So if this is the A leg down, the B up, and then the C down, then the C looks about complete. I'm not very interested in going long on the index itself. Instead, I'm doing some stock plays right now. But so far, it does look like if this correction is complete, A down, B up, and C down, then we expect this market to just take support above this trend line. Right. So if the market takes above support above this trend line, that basically means the market sustains above it, probably even comes back and retests it somewhere here. Who knows? That will be ideal, and then takes off. So this will be a sign of bullish activity, and we would like to go long once we see some confirmation like retest of this trend line and market spending some good kind of movement above this trend line. So basically, it's a wait and watch kind of market with some bullish bias building up, but no confirmation yet. So actually, no trade set up as of yet. So we wait for the market to show some activity above the channel, and then we, based on the activity, will decide if we want to look for longs or not. As such, it is a very stock specific kind of market because of the current environment here. I have said it 2-3 times before as well. This is the market you want to go and trade the stocks in right now and not the index so much. With that being said, our analysis on Nifty is wait and watch for play above the trend line. Nothing much to add on it. And yeah, by the way, if it does break the low, that will be quite bearish. I will be interested in taking shorts if it takes out this low of 21934. Short term shorts, because the downside target I'm not so clear what will be, but short term wise we can expect at least good movement here, intraday kind of movement. That's about it for Nifty. Kind of wait and watch, and with that, let's head over to our last chart, BTC or Bitcoin. Again, Bitcoin was a wait and watch kind of market, as we discussed in our last webinar as well. We were not very clear on which direction this market was taking. We had some counts here, which I'll just show you in the live webinar conducted last time. Here is the discussion on Bitcoin. There were two basic ideas we were discussing, that A down, B up, and C down is complete, right? And the second idea was that it is being followed by an X, as you can see over here on the right hand side with the yellow count. So X, and then there will be another down move. So Only way to confirm this kind of count is to see the market go below wave C low. That will be the only time we can see a confirmation for it. So basically, it was wait and watch. No trade was taken on this counter. Right now, as as such, here's the chart. Yeah, as such, we still don't have any confirmation. We still can say that the same count holds. You can place the B here, there. It can have multiple variations, but the idea remains still that this is just the ABC correction. We don't have a confirmation if this is going for an X and then another ABC. My personal bias is that bearishness can come into play on this counter because it does seem to have some demonstrable signs of weakness, which I will not discuss here. So as long as the structure is below this last high, which is 73,225 or actually 73,834 on this chart, we cannot say that there is any good possibility for long, right? So what's the play here? If this is a WXY play, then as I said, the confirmation only comes at the break of the low. So once the market is below 58,000, then we can say that it is heading for this kind of leg X and then another leg down A, B, and C, right? So far, still a wait and watch market. My bearish remains that no longs until we see a breakout. It will be a risky long, or the risk is quite big in my personal opinion, right? As far as anything else is concerned, there is one more count, but I don't think it does add anything to it. Still remains the same. Short term bullish activity can be seen around 65 200 plus, because we can expect zigzag kind of move even if the count is bearish. So yes, short term longs can be taken around 65 477 plus levels for minor upside movement, but that will be very intraday kind of play. So my bias remains the same on Bitcoin. It's just a wait and watch market, no clear trade setup, and stay out of it for now until we see one of those upside or downside levels taken out. So that's about it for our discussion, guys. And if you enjoyed it, do not forget to hit the like button, and much more importantly, share this content once you have checked it out. If you are checking it as a recording or if you were live, kindly share it as soon as possible. We would like to see much more participation here. And with that being said, thank you for staying till the end, and I'll see you guys in the next one. Take care. Thank you, Martin. Always appreciate your support.